Morning, you're watching the market right here on 80 now, and good recovery actually for the markets yesterday. So after some consolidation on Monday and consolidation pretty much for the better part of trade yesterday, we finally managed to spring up from the session lows, and we managed to eke out that 19,600 mark and reclaim that tough resistance mark for the Nifty. Ahead of the weekly expiry though, metals have been snapping the two-session losing streak. The Nifty small and mid cap, that's where all the action is, and they managed to gain for a fifth consecutive session. Realty, that declined. The rally in pharma continues, and guess what? FIIs turn buyers. Surprise, surprise.
Yeah, see, it was an 8-day selling trend.
Yeah.
It was eight-day selling pattern. It was never a trend. I think we are going through this patch both locally and globally where the news flow, I think, has been abundant. The news flow has been abundant, and even though the news flow, some would argue, has been mixed with macro concerns making a comeback, the price action both globally and locally, it's not scary. Look at what has been thrown at the markets at a global level. Fitch, high oil prices, high vegetable prices, US inflation making a comeback. Locally, FI had turned sellers, barring yesterday. None of the last leg of the numbers, excepting banks, they've been great. In general, concerns centered around vegetable prices, they've been making a comeback. But yet, markets in a sense have been in a range with a downward bias. If one really looks at the month of August, which is what you need to look at, and it's a very myopic data, I understand, but let's look at the month of August to establish that data, that what do we have in terms of a pattern here. In the month of August, about 9 trading sessions, about 9 days now, the Bank Nifty is down by 2%, Nifty is down by 0.5%, the small and the mid cap index, I think, are finding their feet, so to speak. So you cannot read too much into the market action, and that is how I think the market action has been range bound, not going anywhere. Even though the bias and the news flow has not been very constructive, I guess somewhere the bulls have done a great job of defending the market. I think in this market, rather than chasing the price action, you need to be a buyer on bad days. Every bad day, I think the market still is finding support at lower levels.
And you know, to the point that you were making about the trend, if you look at year-to-date data, FIIs have been massive buyers. It's only month-to-date, and like you said, it's only 9 trading sessions. That's just been the eyesore.
I don't think we can read into... See, for me, the larger trend is that they were sellers in 2022 and they are massive buyers in 2023. 8-9 day, last couple of days, it could be a little bit of skim from the top, maybe some macro adjustment because of what is happening to bond yields. But in terms of the narrative, which was always money moved out of India, went to China, that has reversed completely. The appetite for India, I think, is at a record high. The appetite by foreign institutional investors, I think, is insatiable. So I think the broader trend is that Indian markets will receive flows. Sometimes when markets, they run up, and sometimes when FIs have their own compulsions, you may actually see within the large trend some pause. Yeah. So I think what we've seen in the month of August is a retreat, a pause, but the larger trend is that foreign institutional investors, they still really want to make a comeback. I was looking at some data, and me and Patricia were discussing it, and that's how I think the positioning of the market in my book is. What are the macro investors telling you? There is a concern. What are the momentum investors telling you, or telling you there is a bit of a pause? What are the HNI investors doing? They are simply looking for deals in the pre-IPO market or in the SME market. And what are retail guys doing? Well, they're still chasing individual stocks. I think that is how the construct of the market is. No, not the strategy for the day. Maybe the graphic is not ready.
Yeah, but it's interesting looking at each of the different categories and what their approach is to the markets, as you were just alluding to. But yeah, you're talking about that range. Just take a look at the last month as well, the month-to-date data for the Nifty Bank, or even the broader markets, and that really reflects the very tight range that the markets have been in. And there you have it, Nikunj. You were talking about how each of the different categories like HNI investors, etc., are looking at the markets right now.
Yeah, we discussed that, and that's how I think we'll start right now.
Yeah. Okay, so let's talk about cues ahead. And this morning, well, we're waking up to cues of that's looking pretty tempered, at least when it comes to the US markets, and that's largely ahead of the CPI data. But the big cue today is going to be the RBI. And given that the expectation is that it's definitely going to be a pause this time, Nikunj, the question is it really going to move the needle in terms of market sentiment?
Look, The consensus view, let's say 3 months ago, was that global interest rates will peak out and Indian interest rates have peaked out, and there could be a cut which cannot be ruled out if that kind of a trajectory continues. But then, there is a chaos if you look at what is happening to the vegetable prices, whether it is tomato or what is happening to the onion. On top of that, you got grain prices which have started moving higher. Government is taking emergency measures now. The food secretary yesterday announced that they would be releasing more rice and more wheat. There are measures which have been really taken in terms of, for example, ethanol, where food was converted into fuel. So those changes were adopted, and those emergency measures. So you cannot just rule away what is happening in the food and the vegetable space. That is important. Why? Because that is an important component which will drive the CPI inflation. Reserve Bank of India is particularly careful and cautious about which way the CPI inflation would move. So I would have imagined that if vegetable prices have not moved higher, Reserve Bank of India would have actually made a case for a cut. So I think cut is out. I think there could be a little bit of change in narrative where Reserve Bank of India may start sounding slightly hawkish, and maybe today is the correct policy. When you just brought the guard down, you will have to reload the guns, and you'll have to reload the guns to prepare if inflation comes down. Look, the guard on inflation fighting was down, and you were ready to pack them up and take them back in the barrel. I think you'll have to get the guns back and get ready for the war.
Yeah, absolutely.